Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Hey everybody, welcome to the weekend edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day and a great trading week. We are going to kick off what we do each and every day, taking a look at the same 10 to 12 futures markets, identifying potential breakout trades and turning points from an educational perspective. All right. So want to real quickly make a, this is our weekend edition, so we tend to look at some slightly longer term, bigger picture items. We do this before our live trading room tonight. So those of you guys that are going to join us in the live trading room tonight, we will review some of these issues, but then we'll go over some individual trades and spend a bit more time on individual trades tonight as well regarding individual equities and options positions. For those of you that have never been in the live trading rooms, get a pen, mark this down, October 21st to the 26th. We're actually going to have a trading room preview. So go to TradersArmy.com, sign up for the free subscription, and you'll actually get an email that talks about our free trading room the week of October 21st to 26th. So we're going to have some live rooms then. All right, let's dive right in. So the S&P, we had a huge move down on the S&P and the Nasdaq on Friday, continuing our overall weakness. However, no big surprise on each one of those, right, as we have come down pretty hard. Now, in both the S&P and the Nasdaq, we had shorts set up at these pivots and a little bit of basing below the pivot. So when you have a pivot and a base below the pivot, your stop, you want to be just above that pivot. And so both of these levels worked out for a pretty nice little run. Hopefully some of you were able to catch that nice run down. My guess is most people are not holding things over the weekend. I know at this point I'm not holding things over the weekend. So now I need to remove those areas that we had the level where price came down from. Now, I will say this, in the Nasdaq, we actually came to our buying area and rallied back up. So you actually caught the high of the day and the low of the day for the Nasdaq if you're trading both areas. Now, we broke through that level, so I need to remove that line as well. So we hit this and the low of the day, and now we've come back up. So that means I can't really use either one of these levels going forward. So when I go to my kind of bigger picture on the 4-hour, we are definitely in a downward trend. Lower swing highs, lower swing lows. When I move to the daily chart, we can see that we have an extended pullback. But when I pull this to the daily chart and I draw my upward trend line connecting bottoms, we have broken through that. And it's really to no big surprise because our momentum has been slowing. I talk a lot about momentum, and if you notice, we've gotten lower highs on our momentum indicators, and we've gotten higher highs on price. That's typically a very weak sign. So, I'm not overly surprised that we're getting a bit of a pullback. I don't necessarily think that we're gonna, that the market's gonna fall apart here, but it wouldn't surprise me at all to see, another week of some decent pullbacks. And, into this area here, the 7303, 7203 area, that seems to be a pretty logical pullback point from where we were. Remember, when we're at these all-time highs, any pullback's going to feel, scary, if you will. And each pullback is one of those things that people tend to maybe sometimes take a little bit more seriously than they probably need to. And so I think that's kind of what we're seeing right now. Now, the one that this is coupled with, however, is something that we haven't seen in as much is the rise of the interest rates. And the interest rates going up, causing the bond markets to plummet as well, has really been what's concerned a lot of investors, giving them a little bit of a spook. But heading into this week, I've got to stay on the bearish side, especially early in the week. Looking at the 4-hour chart, we've kind of eaten up most of this area in here. I've got a little tiny level there, which we found on the 1-hour chart. There's this little area here on the 4-hour as well. So all of those are potential areas. Until I get a higher swing high and a higher swing low, I've got to consider myself bearish heading into the week from a trader's perspective. Now, crude oil. We had a setup in crude oil for a potential reversal off the 15-minute chart. So looking at the 15-minute chart, it was up here, utilizing this as our profit target. We unfortunately did not make it all the way up to that area. And so I'm still going to leave this reversal in here. I still think this is a very valid reversal, but it's a 15-minute level, so it's got a little bit more weakness. We'll see where we open up later today. We will open up when we open up later today. We'll see if we open up, what this basing here does for that opening up, because we could have another breakout opportunity. Last couple of Sundays, we've had some really nice breakout trades on crude oil each of the past couple of Sundays. In gold, we had a potential breakout short below this blue line, and we did not get that order filled. It did not drop below, so that level still stays in play. I wouldn't put anything up above, as we currently have been basing for a while. Moving over to bonds. Bonds have continued their strong move down. I don't really see that changing all that much heading into the next couple of days. So what I'm going to do is let's take a look at some bigger pictures. And for bonds, I've got to go out to the daily chart. And I can see that on the daily chart, I've got a level way down over here, so we're just about to that area now. I wouldn't be surprised to see a bit of a bounce off of here to rally us back up into this region for a decent reversal. And mind you, I'm going all the way down to the daily chart to find it. It comes from this little area here on the weekly, which is a little bit of basing above a pivot low. That's where that area really stems from. So we're going all the way back to these are lows in the bond market from, what was the date on that? That was, April the 5th, going all the way back to 2010. So we're going way back to find those areas and where they come from. In the Aussie, we had a breakout short in the Aussie, so I don't know if anybody grabbed that breakout short. If you did, do me a favor, leave a comment down below. I'd love to hear in the comments some of the trades you may be taking or maybe doing or using in your particular style. So the Aussie trade, the breakdown has worked out pretty well. It's continuing to move. We have still more room for the Aussie to continue to drop. And I put a tweet out that I said, listen, it's I want to see some basing before the breakout, and we did get enough basing here before the breakdown for it to be a decent little entry. And then price fell pretty strong from there. We could be setting in even another base with this little sideways price pattern here. Let's see how it opens up later today. If indeed that we pop a bit higher, I don't know that I would short any of these levels. I would actually look for my next shorting opportunity to be right in here. This may be a decent little shorting opportunity right in that area there, where we have a little bit of basing, a little bit of sideways price action before a pretty decent drop just before the breakdown. In the euro, we're still between two levels. Didn't come to either one of those levels on Friday or earlier in the week. And then in the Canadian dollar as well, still between a couple of levels fairly far away. I think that there's an opportunity to trade this one short below this area here. If we gap down below it today, then I'm not sure I would do it. But if we open up right in here, then it might make for a decent short potential, at least to get down to that next level. Great British Pound, Japanese yen. So in our British pound trade, we've come back to the area. Let's see how what we look like this morning or this evening when the futures market opens up, so we can see if we get a bit of a reversal off of there. Japanese yen trade did not work out. That would be a negative ghost rider. As we had the move down from that area, but then the second time through, we got a little bit of chop. I said, move your stop to break even. If you didn't move your stop to break even, then you probably got stopped out on Friday as it came to our red line here, which was our stop loss point. So if you moved your stop to break even, then this was a break even trade. That was what we had talked about on, I want to say it was Thursday, as really the best opportunity in that Japanese yen position. And if you didn't, then you probably got hit the stop out point. But overall, if you were following the big picture direction, you should have had a pretty decent week. So heading into this week, remember, don't tug on Superman's cape, don't pull onto the wind, don't try to trade against the big picture. If the big picture tells me that I should be a buyer, then I'm looking for areas of imbalance where there's more buy orders than sell orders. If the big picture tells me that I need to be a seller, then I'm looking for areas of imbalance with more sell orders than buy orders. And that's really the key. Let the orders dictate where we're going to go. Remember, October 21st to the 26th is going to be our free preview live trading room week. For those of you that are not subscribers, premium level subscribers at tradersarmy.com, go to tradersarmy.com, sign up for a free subscription, and you'll get the invite. So thank you all so much, and I hope you have a great day, and I will see you later.